Hey guys, welcome back to the channel. Today I'll be showing you guys how to backtest future spreads. For this tutorial, I'm using the data we scraped from bar chart for all the daily futures data, just so that everybody has access to it. And at the end of this video, I'll recommend that tutorial so that you can scrape this data as well. So here are some of the packages we're going to require. I'm also going to leave the monthly codes for the futures contracts. And the first block of code that you see is me requiring all the files I scrape on a daily basis, row binding them and formatting them, as I haven't saved these on a database yet. Now, since these are data frames, I need to convert these into XTS objects. So that's what this function will be doing. So I'm passing in the ticker name. I'm going to subset all my data to only that ticker. I'm going to convert it to an XTS object. I'm going to make sure my index is unique so that we don't have any duplicates. I'm going to format the column names and return that XTS object. So I'm going to minimize this function. The next line you see is me applying that function and passing in all the tickers so that we can merge all the contracts together and have one XTS object with all the futures contracts. So I'm just going to read that in. So if we take a look at that XTS object, so here we see all the futures contracts, and this XTS object has data from 2021 till present. And as you can tell, we have 1,800 different columns. So we do have quite a variety of futures contracts. So what I'll be doing in the script is pairing one of these futures contracts with all others, and we're going to create spreads by taking the difference in points, and I'm going to apply a Bollinger Band around the spread so that we can trade around it. So let's go back to our script. If you're a Patreon member, you'll have access to the script along with this XTS object with all the futures contracts. Otherwise, you'll have to import your own futures data set and format it the same way that I have shown you. The next two lines are just going to extract the ticker names, both the long form and the short form. So I'm going to run these two lines. And then we're going to check all the futures contracts that are available. So if we check our console, these are all of the futures contracts that are within that XTS object. Now for this tutorial, I'm just going to pick the soybeans contract. So if we scroll down our script here, I'm going to run line 42, and we're going to print out all the soybeans contracts that we currently have available. So if we take a look at the console, these are all the soybeans contracts within that XTS object. So by looking at this list, I'm going to use this May 2022 contract for the soybeans, and I'm going to create spreads with all others, but I need to exclude the ones that have already expired or are about to expire. And I created some functions to do that. But just as an example, I'm going to create a spread using these two contracts, and we're going to go ahead and plot it. So let's go ahead and minimize this and run this block. Alright, so let's take a look at the plot. Alright, so this is the spread between the two contracts along with the moving average and the RSI. And this strategy involves shorting one contract and buying the other. So if we were to buy the spread down here, we would buy the first contract or the July contract and simultaneously short the other contract, which is the September contract. And as you can see, the spread went from being under 20 to over 120. So by longing the spread, we would have kept this difference, but that move would have taken a couple months to develop. So that's why I opted in using the Bollinger Band strategy, where we can trade around the moves this spread makes. So let's continue on with the script. So as I mentioned, we need to get rid of the futures contracts that are expired or about to expire. So I have written two helper functions. The first is called num futures codes. And if we open up this function, we're going to pass in all of our contracts. It's going to basically replace the monthly codes with numeric ones. And by doing so, this will help us get rid of the contracts that have already expired. So that's all this function is doing. So I'm going to minimize it and run it. Now to actually exclude the expired contracts, we need to pass in the main contract we want to trade and all other contracts, which is matches. So when we pass in our main contract name, it's going to subset the month and the year. I'm also going to assign the previous year just to make it easier to remove all the contracts that were from last year and not this year. I'm going to use my helper function to convert the monthly codes into numeric. And then the following two lines are just going to return the matches and the ones that we should keep. Now that we have our matches and the contracts we need to keep, we also need to assign the ones that we need to drop. So that's what this line is doing. And after we make the comparisons, I'm going to return all the contracts that haven't expired so that we can calculate spreads on those. So I'm going to go ahead and minimize this function and run it. Alright, so in order to calculate the spreads, we're going to use this function called getSpreads, in which the user will enter the very first contract that they want to use. And based off of that contract, it will calculate spreads on all other futures contracts that are available and exclude the ones that are expired or about to expire. So if we open up this function, we start off by getting the name of the main contract, and then we're going to go ahead and drop it so that it doesn't calculate a spread on itself. And then we're going to run exclude expired contracts which will get rid of all the other contracts that have expired and only calculate spreads on future months and future years. Now, in order to calculate the spreads, we use this next block, which will pass in all the matches. We're going to merge the data, calculate the spread here, format the column names so that it has the names of the contracts that are being used, and then return that spread. And after we merge these, it'll return all the spreads. So let's go ahead and minimize this function and run it. So as an example, I'm just going to use the soybeans May contract. So let's run that line. And if we take a look at spreads, all right, so we have a total of 20 different combinations or spreads. Our first contract is the main contract that we chose, and the second contract we will need to use to generate the spread. All right, let's go to our next step. All right, so I'm not going to plot it since we already know what the spread looks like. This very next block is optional. This will just get you the ranges for the spreads. So we pass in all of our spreads and calculate the range of them. So that'll return the min and the max. I also add a midpoint, which is the difference between the min and the max. I reorder them so that it's min, mid, and max. I'm going to add the last value and the points to reach the low, mid, and the high, and return that as a data frame. But this is not part of our strategy, so I'm not going to go ahead and run this. Now, to calculate the Bollinger Bands, we're going to go ahead and pass in a location for the column we want to calculate the Bollinger Bands on. So let's open up this function. So if we pass in 1, it'll grab that very first column in our spreads, calculate the Bollinger Bands, assign a signal for a column, and here's where the strategy is. So whenever it crosses the moving average, it'll go ahead and zero out or close our position. We're going to short if the spread is above the upper Bollinger Band, and inversely we're going to long if the spread is below the lower Bollinger Band. We're going to start off by being flat the first day and also the last day. We then fill in the signals for the other times by using NA-LOCF. We're going to lag our signal and replace any NAs with 0 and return that XTS object. So we're going to go ahead and minimize this function and run it. I'm going to pass in a numeric vector for the number of columns we have in our spreads and apply that function. So that'll get stored in futures BB. Now to extract the returns, I'm going to extract a couple of things. So if we open up this function, I'm going to extract the number of trades, the P&L of one share, the min, mid, and max for that spread, and also the list location. Since I will be passing a list, this will help us identify the location of where we can find the returns for any particular spread. So if we go ahead and minimize this and run this function, again, I'll pass in a numeric vector for all the elements in our list. So if we run this line, I'm going to use do call rbind to row bind all the returns. So if we take a look at rets. All right, so the very first column returns the futures contracts for the spread. We have the number of trades, the P&L of one contract, the min, mid, and max for the spread, and finally the list location so that we can extract the details of the spread. So as you can see by looking at the P&L, not all of these spreads are profitable. Sometimes the spread will move further away from the Bollinger Band, but there are some opportunities. But just note that even as spreads, these are incredibly risky, so they may not be for every investor. Now finally, I'm just going to plot the equity curves for the first 9 spreads. So let's go back to our script. So I'm going to create a window of 3 by 3 and plot the equity curves. And if we take a look at that plot, all right, so these are the equity curves for the different spreads. All right, so at a glance, it looks like when the spread is stable is when it appears to be most profitable. If you recall, we saw a very large spike these last few months for this futures contract, and that's where it's having a little bit of trouble. But if you can find a stable contract, one that's not very volatile, then I think the strategy might work. But in the meantime, just keep an eye out for when things start to normalize again. Well, with that said, this concludes the video, guys. I'll leave a link down in the description area where you can find the script, and I'll also be providing all the futures contracts up to this point. Please subscribe to the channel if you haven't done so already. Thank you so much for watching, and I'll see you guys in the next video.